Let's bring in Mark Zandi and Ted Rossman. Ted, thanks for being on set with me. Mark, let's start with you. Anything new that sticks out to you in what Powell said? As Steve noted, those expectations for a June hike have ticked slightly higher.
Well, he stuck to script. He's still beating the drum that he's got time because the economy is strong and inflation's still above target. I think the key words for me in the speech was they're looking at this meeting by meeting. So it feels like he's saying, look, every meeting is live. We could make a change at the next meeting or the one after that. So it feels, like a rate cut is coming. He did mention January, February inflation data. I think that's really critical. The inflation data is really critical here. Jobs less important at this point. It's all about inflation. And we've got to make sure that the bump in January, February inflation was just, measurement, seasonal adjustment, which I think it is. So we'll get better inflation numbers, but we've got to see that. And once they do see it, I think we'll get a cut.
Ted, break down the consumer impact. What matters more for them, a looser policy or a stronger economy?
I think people right now are looking for a stronger economy and actually feeling that in the form of lower inflation, basically. Because right now, by many measures, we have a strong economy. I mean, we have strong GDP growth. We have the lowest stretch below 4% unemployment since the 1960s. But you say a lot of this to people and they say, well, I don't feel it. I don't feel that secure in my job, or my costs are up, or I'm not getting ahead. So I think that whole sentiment versus reality is really important. Depends where you are on the spectrum, too. I mean, if you have credit card debt, those rates and balances have never been higher. If you're a homeowner, that's good, but you're probably not in the mood to move. You don't want to trade your 3 or 4% rate for a 7% rate, and plus the house is going to cost more. It's especially hard for young people looking to enter the housing market and pay down debt.
Right. We're going to talk more about the housing market. But, Steve, I want to come back to you on this matter of inflation. And you mentioned that Powell said that there was not a material change. But what about the move that we've been talking about, especially this week, in commodities? Price of oil back near $90. Is that going to trickle through and make those numbers especially stickier?
Deirdre, that's a great point. I'm becoming a little concerned about what the March inflation report is going to say when we get it later this month. You've had oil prices higher. You've had commodity prices higher. And you've had, I've been following this Cleveland Fed nowcasting on inflation. It remains kind of sticky. So I don't know that I'm confident we're going to get the relief that everybody wants from those January, February numbers. We talked to Bostic this morning. He said he's settling in for a slower progress. I was looking earlier at the movement in inflation over the past 3 months. It's only come down 16 basis points since December. And in the months before that, it came down 44 basis points. So it has slowed. Right. Loretta Mester said she's not surprised by the slowing of inflation progress because she had forecasted. So we're all going to have to, I think, take a deep breath and maybe just be a little bit more patient, hope that inflation is moving in the right direction, and not be frustrated that it's not moving faster, because I think it might be that the easy part's been done and now we have to battle a few headwinds in commodities and other things. And it'll just be, basis points now, not say tenths of a point as it was before.
Right.